Hi, this is Denver Noas with IndexLife.net. Thanks for taking the time to view this quick presentation. Have you noticed when you Google life insurance as an investment, everyone says it's expensive? A lot of articles out there that say that it is. Well, I have a question for you. Has anyone ever added up what you'll pay on your current investment account? Interesting. And would it be fair to add up the cost of what you currently have and compare them to the cost of a life policy? Sounds like a good idea to me, so let's do it. If I go out and I put $500,000 into an investment account and I'm going to pay average fees at 1.25%, that's going to add up to over $364,000 in total fees paid over a 30-year time frame. Now that probably gives you a little bit of sticker shock, but the thing is you probably have already bought this product. You probably already own this if you've been investing for a while, or this is going to be what you're going to pay in your investment accounts over the next 30 years. The problem is no one has just ever added it up and told you what it's going to cost. Now, if we compare that to a life insurance policy, $500,000 going in, all fees included, it's going to cost me $160,000 over the same 30-year time frame. It's going to be actually a lot less. And the interesting thing is we haven't even accounted for taxes and the distribution plan because we're investing these strategies to actually have income out. We've got to plan for that as well. And it actually takes some detailed tools to do that. This is the tool that we use. You'll see the index life policies in the green, the taxable accounts with the fees and taxes in the middle in red, the tax deferred account, that would be your IRA or your 401k, on the far column on the right. Now, this is not to say that any of those other options are bad. I believe in using all the different strategies in planning process. But I want you to think about something that's called really an error of omissions. And that's not including something such as an amount or fact that should be included. Because if we actually look at the numbers and add it up, what we'd find is that during the first 10 years, the life insurance is not the least expensive option. In fact, well, costs a little bit less than a taxable account, but it costs more than a tax deferred account. But as we go down throughout, over time here in 20 years, it's going to cost less than both the other options, and certainly over 30 years, that's the number from the previous slides, is going to cost a lot less. So would it be an error of omission for me to say, hey, life insurance is expensive without adding up all the total costs and including them and then comparing them to what I currently have or what are the alternative options out there? And I think that's what you'll find when you see most articles out there is there's not actually a detailed comparison of what's actually happening. Because when you start accounting for it and you start actually adding it up and letting the math do some of the work for you, what you find is that the life insurance policy becomes an option that can provide one of the highest benefits with the least amount of cost. And here's an example of a 45-year-old. We have this $500,000 going in, and it's going to provide $109,000 in retirement income tax-free at age 65. So the IUL is the top line there in the green, and you see it's highlighted. It's going to provide $2.3 million in income, plus you get a death benefit so roughly total benefit there in the green, highlighted in the middle, a little over $3 million in benefit. And it has the lowest cumulative fees that you will pay. That's the second column from the right, $217,000, much less than the other options and a much higher payout. So what's the disconnect here? Well, first of all, I would go back to the question that we started with. Has anyone ever added up what you'll pay on your current investment accounts? Usually the answer is no. Now they may have told you, hey, you pay 1%, you pay 1.25%, you pay 1.5%. Obviously, there's a lot of hidden fees in investment accounts and everything else. Doesn't mean they're bad, but they all do add up. But no one has ever shown you what that total is going to be. So no one ever gave you a reference point, right? They said life insurance is expensive compared to what? And if I walked in and I said, hey, you should put $500,000 into a life policy and it's going to cost you $160,000, you're going to be like, man, you're crazy. That doesn't look like a good deal to me. Well, compared to what? Your current account, you have $500,000 in, 1.25% fee. It's going to cost you again $364,000. That's what you've already bought. No one just told you what it's going to cost. And now what if I said, well, this life policy is also going to give you $2.3 million in income plus a $750,000 death benefit, so you'll really have a $3 million plus payout versus the alternative $1.6 million on your current plan. Now which one is the least expensive option? Which one provides the most benefit? It's a different story when you start looking at all the numbers. And it's not to say that life insurance is always going to be the best option. And it's not just about saying what's best. It's about analyzing the different options and letting the results determine the best strategy. You've really got to look at the detailed math and compare all the options. And to me, that's what a fiduciary responsibility includes. It's really comparing and analyzing different options and then choosing the best plan based on whichever one is going to fit in your situation. That's why I like using all different types of strategies in the planning that we do. But when you think about all of this stuff we've talked about so far, you're watching this presentation, you think about it in the context of life insurance and some of the negative articles you see out there. Have you ever seen this type of analysis before? Has anyone ever showed you, what you're paying on your current stuff, how that would compare, what's the actual cost of the proposed strategy? Most of the time, you don't really see that. Now, for sure, there are a lot of different types of life insurance policies out there. Index life, survivorship, variable, guaranteed whole life, universal. Some of these types of life insurance policies are expensive. And some of those I don't really think are that good, and I wouldn't use them for income plans. I think whole life, variable life, they're not really the best products out there. They probably are on the expensive side, and I don't particularly use them for income planning. I think index universal life has the best, blend of low cost and upside potential and everything else. But that being said, when you see those articles, a lot of times people just take this broad brush and they say all of these are the same. Well, that would be just like saying, hey, all cars are the same. Well, all cars are not the same. Different cars have different prices, they do different things, they have different features. And so one thing we want to really be aware of is red flags. And to me, blanket statements are red flags. Whenever you hear people say, hey, all real estate's bad, all stock market investments are bad, all mutual funds are bad, life insurance is bad, blanket statements are not really accurate, right? Because there's good and bad in every strategy. There's good stocks, there's bad stocks. My own personal experience, my mom had got an inheritance from a life insurance policy she had back in the late 70s, and it was about 70, 80 grand at the time, a huge amount of money for our family, but she invested it in the stock market, ended up losing it, on some penny stocks based on the advice of, the bank or whatever. So when I came into this business 17, 18 years ago now, I had a bias toward the stock market. Well, obviously that was incorrect because there are good investments, there are bad investments. So that's the same with every category. You really have to look at things and judge them on their own merit. But I'll give you a couple of my tips on how do you recognize, certain things that are what are called logical fallacies, when people are just kind of making statements that aren't really accurate. And here's a few of my favorites. The first is what's called a hasty generalization. And that's an informal fallacy where you base decisions on insufficient evidence. Well, does that apply to the articles you see on life insurance? Well, certainly. Have you ever seen anyone add up the cost of what you're currently paying or add up the cost of a life policy, compare it, and have they accounted for taxes and fees and the distributions? Usually you don't see a real complete analysis on that. So it's just kind of, again, kind of a jump to conclusion without all the evidence. My next favorite one is the appeal to authority. When in the face of conflicting evidence, one summons the opinion of an expert to solidify their argument. All right, so you see articles out there, Dave Ramsey doesn't like life insurance, right? It costs less, and an expert can just say it doesn't cost less, and everybody goes, okay. And now, to be fair, I don't think that they're really doing that on purpose. I think they probably haven't actually added it up, or they're doing kind of that broad brush approach where they just pick an expensive policy like a whole life or a variable life, and they are expensive. But in all the stuff that I've seen from Dave Ramsey, he loves mutual funds. It's great, but I've never seen anything that shows how much is the cost of owning those mutual funds over 30 years. Is it expensive? Is it more than a life policy or less? Does it provide more benefit or less? We don't know because you don't compare it. If you don't compare it, you're not going to actually see the real math. The next one is a false dilemma, and that's a situation in which only limited alternatives are considered when in fact there is at least one additional option. Okay, so that's the broad brush. We've kind of talked about there are expensive types of life insurance policies out there. That doesn't mean that a better one doesn't exist, but this can help you kind of recognize maybe some of the things you hear and know that you need to maybe look a little deeper. Because overall index life insurance has some great benefits. You have the tax-free income streams, the market protection, the double-digit growth potential, and lower overall costs. And it certainly does have the downsides. It has higher costs in the early years, it has surrender penalties, and it's really designed for people that are in the top 10% of income out there. And there's reasons for that. And so this is, again, not to be a comprehensive view. We have detailed webinars and videos and everything that will go into how they grow the money, what are the strategies they use, how do the growth strategies compare, how do the costs compare, why are the costs higher in the early years. And we have videos that go into every particular topic and how this fits in an overall plan. And if you'd like to see some of those resources, well, you can download our free ebook, How to Create 6 Figures or More in Tax Savings, and that's our free strategy guide for top 10% income earners. That's at indexlife.net. And then you can also go to our YouTube channel and view all kinds of videos on everything that we have discussed. So thanks again for watching. Please contact us through the website or through YouTube if you have any questions.